Okay, well, there was a great article in the Wall Street Journal over the past week called "University Endowments Mint Billions in the Golden Era of Venture Capital." It's basically talking about, these university endowments are like gaining 50% year over year. There's been like nothing like it before. There's so many unicorns being created. There's a separate article in, I think, PitchBook as well about the rate of unicorn or Crunchbase. That the rate of unicorn creation. I think last year it was like one every few days. Now it's more than one a day.
Bonkers.
And so, we're getting multiple unicorns now created every day this year. It's just this golden era of VC, this engine of wealth and prosperity creation. So that's the good news. And to connect this to a point we were talking about earlier, if the radicals on the left would just allow the golden goose to keep laying golden eggs, we're going to have enough wealth and prosperity to pay for all these progressive programs in the long run. But they're not willing to wait. And so you have in Washington, for example, I think a political program that really could upset the apple cart. You're talking about a $3.5 trillion reconciliation bill. It'll probably get brought down to somewhere between 1.5 and 2. Then you got a $1.2 trillion infrastructure bill. They've already spent $1.9 trillion on a COVID relief bill. This is after the $6 trillion from last year.
What would you advise should be the amount spent?
Well, okay, good question. So last year, the federal government generated record tax receipts, the most revenue it's ever raised, and it was about 19.5% of GDP. When Bill Clinton left office, he boasted about the fact that government spending was only 18.5% of GDP. Last year, it was about 30% of GDP. My theory on this is that if you have government spending as a share of the economy at around 20% from a tax and spending standpoint, things basically work, okay? But as you try to go up to 25 and 30%, it starts to break. You have too much deficits and debt, too much money printing, too much taxation, too much inflation. You become more brittle, and you basically are,
unhealthy.
You're killing the golden goose. And so, all we have to do is let the economy keep ripping. 20% of it is going to be government share. And you'll be able to fund more and more progressive programs over time as society gets richer. And by the way, this prosperity that's being created in the tech ecosystem, it's available to anybody who has a good idea. This is not so as we all know. So it's not just government that's creating advancement and economic opportunity for disadvantaged people. The tech economy is creating it as well. And what I worry about is why are we taking so much risk in upending this whole system that is working quite well?
Well, the other thing is this is all in the face of there being 11 million open jobs. There's 1.4 jobs for everybody who's unemployed. So the idea that in some way society is broken and people can't be employed, now these might not be the greatest jobs.
There's only 4 million. There's only 4 million people looking for work. There's 11 million outstanding jobs.
Yeah. It is bonkers. Friedberg, do you think this is sustainable? What are your thoughts on spending and turning over the apple cart, as Sacks is saying?
The longer you guys have me on this podcast, the more likely it is you guys are going to unmask me as a diehard libertarian. I will not let my tendencies, come out in full force. The spending is ridiculous and there's a lot of waste. So, I'll just leave it at that. What I think is interesting, though, is this unicorn creation system, this unicorn creation machine. It's worth highlighting because I think that Crunchbase article showed that these unicorns in aggregate were worth like, $1.5 trillion or something. So those are all private companies.
$3.4 trillion. $3.4 trillion. Yeah.
So is that the amount of both bills?
$3.4 trillion is the total market cap of all the private unicorns, not just in the US, but at the world. And right now in Washington, they're talking about a $3.5 trillion reconciliation bill. Same size. Can you imagine government spending basically the entire value of the tech ecosystem in 1 year? It's bonkers.
Right. And so but by the way, I think that 3.5 trillion, you can kind of think about that as being the future economy of the future global economy, right? So the entire, I just pulled up the latest quarterly stat, but the entire market cap of public US companies today stands at $47 trillion. The top 500 are about $38 trillion. So, these private companies that are kind of the emerging tech companies are, call it 10% or, 8% today. All public today of all public companies today. And it used to be that technology companies started in Silicon Valley, sold technology to traditional industries. What's happening in Silicon Valley today and over the last 10 years or so is that technology, quote unquote, companies are becoming the next industrial companies. They are replacing the traditional industries.
Profound insight.
And so this is like what we saw, Airbnb is a hotel chain without hotels. Uber is, a transportation company without vehicles.
DoorDash.
But even more importantly, there's an entire emergent class of life sciences companies, of novel hardware companies. And these businesses are leveraging their core technology competence to create an advantage in replacing an old model of doing industry.
They're not selling into the old school companies.
And so I think that and people are freaking out about, some of these big investors like Tiger Global coming in and writing crazy checks. If you take an index of the $3.5 trillion today and said, you know what, these guys today are going to be worth more than the $46 trillion market cap of all the other public companies that sit today in the next 20 or 30 years, that's a pretty good way to kind of place your money over a 30-year horizon. I'm going to go ahead and put as much money as I can into the index of the private companies and expect that they're going to be worth more than $46 trillion in 30 years. I'm going to make a 10-bagger. That's a retirement fund for my family. And so it makes a ton of sense, I think, that these unicorns, given the advantages that are evolving from software and life sciences and so on, do end up kind of playing out. It's going to be ugly, and what'll happen is you'll end up seeing the asymmetry. You'll see oh my gosh, there's something that's 1,000x, 100x return. It'll become a $100 billion public company or $200 billion public company, and then there'll be a bunch of them that are going to die. And people are going to focus on the depths and say this was overhyped, the bubble is over. But the reality is the index of companies today, I would be willing to bet 20 to 30 years from now is worth more than the $46 trillion of all the public companies today.
So, Chamath, one of the things we're seeing here, and you're playing a small part in it or a large part, depending on who you talk to, we now have over 6,000 publicly traded companies on U.S. exchanges.
No, we have less than 4,000. We have about 3,800.
Okay. No, we had 3,600 in 2016, according to the research I have here. According to Markets Watch, 6,000 publicly traded companies in U.S. exchanges. So what's the right number? They could be
counting the pink sheets and over-the-counter stuff, which is
We're seeing dramatically more publicly traded companies. Many speculative ones or ones where you're getting to buy in year 4, 5, or 6. Obviously, you're part of that with all the different IPOAs through, what are you up to now?
We have 6 tech SPACs. We have 4 biotech SPACs. Perfect. I've started or invested in a bunch of others that have gone public.
So let's look at this through the lens of the public markets as well.
My macro view is exactly what Friedberg said. We are much better off with as many technology companies being birthed and being viable, because over the long arc of time, those companies will rebuild things that are today inefficient and broken in a better way. And the world becomes better. The question is, for a lot of people, well, what if the wealth isn't better because it's only, a fraction of the number of people with a very specific skill set that many other people don't have? That, I think, is a valid argument. But then there's a different way to attack this problem, which is you could actually do something really meaningful around corporate interest rates and corporate tax policy that would then get it, right? So even if those 1,000 companies, if you assume that $3.4 trillion 10x's, that's 34 trillion of eventual market cap, right? That's going to be supported by trillions of dollars of earnings. But maybe those things only have 1 million or 2 million employees, but there's 8 odd people in the world. Well, the way you get the money into the government's coffers so that they can reallocate it to everybody that doesn't work at those 1,000 companies is through sensible tax policy that goes after the companies, because those companies will still do the job, right? It's not like you're going to choose to not work at a world-beating startup in a mission that you care about because of the corporate tax rate. Nobody's going to do that, right? So I think this is where, if you actually take a step back and think of the bigger picture, the answer is right in front of us. We just choose not to listen. This is why, again, what Trump did was kind of stupid. He focused on corporate tax policy, cutting it unnecessarily. And now what we're doing is we're fighting over tax policy. And part of the reason why this bill isn't going to get passed is because of corporate tax policy and trying to raise it again. But really what we should do is actually raise it, leave personal rates roughly where they are. Elon even said, when asked by Kara Swisher this week, he's like, I pay 53% taxes. What about you?
Yeah. And it's going to 57. And, it's
53, 57, 61. Who cares? Sure. Whatever. It's all the same.
And he has to, the point he made was, listen, the ProPublica article was really disingenuous. They said he got a tax refund and they never explained, well, that's because he overpaid his taxes massively the year before. So they're selectively pulling information. And the fact is, he said, I will be the first money into SpaceX and Tesla. I'll be the last money out. That is something we want more founders to do, which is never sell their shares and have more skin in the game.
Sorry, I'm sorry. I disagree with that. I think that's a bunch of fucking malarkey.
Why?
If you choose to not sell, so be it.
Okay.
But look at the good that Bill Gates has done by selling down Microsoft. So, COVAX shouldn't exist. The Bill Gates Foundation shouldn't exist.
No.
All the reproductive protection. It had to be paid somehow.
He did that when he hit 60 years old. I'm sure when,
he started to do it when he was 40 years old, Jason.
And Elon sold PayPal, and he was able to use that money to reinvest in Tesla and SpaceX.
Anyway, I think Elon's putting all the money back into two companies that are solving two major issues for humanity.
But he wouldn't have been able to do that if he hadn't sold in the first place.
Exactly. My point is, let's not conflate the problem. If you generate wealth, I think that you should be morally bound by society to put the money back to work. He chooses to put the money back to work by reinvesting so aggressively into the things that he's doing. That's laudable.
Yeah, I think that's virtuous. Yeah.
I agree. But it's not the only way. Bill Gates took a different path, which is to basically take all those profits, sell it down, to then be able to go and put it into the Gates Foundation. People will take multiple paths. The point that's the same among all these people is there's a moral obligation they feel to do the right thing for the future.
Then we're in agreement.
So let's just celebrate that, not some tactical thing about buying